wise man said 1 week ago on this show that it's option expiration. You got to be careful out there. A lot of positions unwinding. That wasn't me. That was Tim Quast. Well, we got some volatility. We had a quad witch expiration, and the volatility is just getting going, folks. Truth matters. Headlines driven market. But what do we believe? Do we believe technicals? You can take your technical analysis. You can throw out that window. Fundamentals getting murkier and murkier. Mish Schneider is going to come out at 8:35. A market veteran of stocks, futures, and options is going to give her perspective on the crazy action. But for right now, folks, we're in the green. Who knows where we're going to end the day? Let's get the wild week started on pre-market price.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, we're looking at these charts brought to you by Trade Station Securities, born to trade, chart, analyze, customize, all in one platform. Trade smarter, move faster, and stay in control with the platform built for all traders. Okay. Oh, I got to get that 1 minute chart off there. That 1 minute chart makes me nervous. I'm going to throw out the high, throw out the low, and tell you we're up for now. 73 handles at 66.32. Buck down a little bit. Big spike. I gave it back down 28 cents, 99.18. TLT flirting back with the got to get the monthly chart off there. The TLT right back down to the lows of the move. USO had a haircut, but it's battling right back. Still down $6. Gold and silver. Boy, oh boy. Trying to catch a bid. No can do. Silver down 1.5% at 61. And GLD down 4% at right around 400. The prints are flying there. Bitcoin is actually like the well-behaved kid in the room with all this price action. Maintaining its gains off its lows from last week, up $260 at 70,480. And I know everyone wants to talk about March Madness in the NCAA basketball tournament. Dennis won't even come on.
I did a bracket. I did do a bracket. I think mine's busted with everyone else. I heard there's no perfect brackets left, that they're all busted.
Yep.
So it's official. Nobody's getting a perfect bracket again. Has anybody ever got a perfect bracket? Has that ever happened?
No.
Never.
No.
Never in the history.
Nope.
But
Dennis,
what's the most you've ever gotten? What's the most you've ever gotten picks?
I don't know the most of like picks we ever get, but I know this is the last thing folks want to hear this morning. But I have cashed on several pools with like 200-300 participants, and I just got to tell you the best story. Can I tell one quick story? I know this is really
1 minute.
People mad. 1989. I'm on the floor in Chicago, and there's a joint pool between the Merck, Board, and the SIBO. A lot of people in there, right? And of course, I take Michigan, right? Well, they make it to the final game, and going into the final game, there's two people. Me, I don't know. The other person did not have the team that Michigan was playing, which was Seton Hall. So theoretically, all I needed was for Michigan to win. If they didn't win and the final score was below 160, I still won. The game went to overtime. Okay. The game went to overtime. Michigan was up. Oh, repeat story. I did tell this one. Michigan was up by 1. Seton Hall missed a three-pointer. If that guy would have sunk the three-pointer, I think I won like $4,000 in the pool. I would have lost the pool. And then the next day, I got a check, or I got my notice from the government that I owed like $3,800, and it was gone. True.
Wow. Stuff like that happens.
I know.
That's
I
awesome.
know. Wow. Truth me.
All
Yeah,
right.
so
Your intro us, Triple
yeah,
D.
so basically we have had four major moving market headlines here starting Friday night. So this was Friday night. We get the truth. We are getting very close to meeting our objectives as we consider winding down our great military efforts. On that truth, the S&Ps rallied 90 handles Friday night. 90 handles because winding down. Again, Trump doesn't like the stock market going down. When he sees the market's had a really bad day, he likes to true something to get it to come back up. So then,
26
markets close,
hours
we're up
later.
90. Saturday morning. This is Saturday morning. Or actually, is this still March? I'm trying to
maybe. Well, at least this truth is from Saturday night, but there was rumblings out there earlier. I think this is the right
yeah.
one. You were
So
looking
anyway,
for, though, right?
Saturday.
Saturday.
If Iran doesn't fully open without threat the Strait of Hormuz within 48 hours from this exact point in time, we're giving you 48 hours, United States of America will hit and obliterate their various power plants, starting with the biggest one first. Okay, so we went from Friday night. We're winding down our operations. Saturday, we're going to obliterate all their power plants, all of them. No power for you. Then we get to this morning, because on this truth, the S&Ps give back the 90 and give back another 70. So we fall 160 handles on that truth. But now, this morning, because Trump wakes up and he can't handle the market being down, that's the truth. You want the truth? Trump cannot handle when the stock market is going down. The Trump put is so alive. He does stuff, and then he looks at the stock market. He's got his phone right here as he's doing something. He's watching the stock market continuously. Well, the stocks were closed on the weekend. He could get more aggressive with his truthing on the weekend because the stocks are closed. Then he's like, oh my gosh, Sunday night, the futures are going down. I better do something. Monday morning comes out with this truth. I am pleased to report that the United States of America and the country I'm in have had over the last 2 days very good and productive conversations regarding complete and total resolution of our hostilities in the Middle East. Based on the tenor and tone of these in-depth, detailed, and constructive conversations, which will continue through the week, I have instructed the Department of War to postpone any and all military strikes against Iranian power plants and energy infrastructure for a 5-day period, subject to the success of the ongoing meetings and discussions. Thank you for your attention to this matter. So the S&Ps just rallied, Joel, 200 handles from bottom to top on this truth. But wait, the story continues. The story continues. Iran denies any talks. This happening 30 minutes ago. Denies any talks. Iran says they haven't had any talks at all. Who knows what to believe anymore? As traders, it's impossible to know what the real truth is. We have no idea. Baron Trump knows the real truth. We don't know the real truth. We may never know the real truth. But what we can see is clearly from Trump's actions and his truths is that he doesn't like the stock market going down. He will defend the stock market as much as he can and say whatever he can to get the stock market to come back up. So we have had the craziest, weekend of overnight action here that I've seen maybe in a long time.
Oh,
so
COVID.
Just the week, Friday night go up 70 on winding down, give back 180 on the potential that talks are now, over, and we're going to go strike nuclear plants or go strike all their energy, and then coming out this morning and saying we've had great constructive talks and now we're 5-day no more strikes, and then Iran denying all that. Stock market going crazy both directions. Wow.
So looking at SP 500 futures, the rally on the quote resolution headline was 250 points. 67.48, the pre-market high that I see in SP 500 futures.
Yeah.
We've leaked about 100 points of that, but keep in mind, we're still up quite substantially, 140 points from where the quote resolution headline happened. So I think what's interesting here is we've been seeing this a few times with a few of these messages on the conflict, where some denial happens, whichever side it is, some approval or confirmation or denial happens, and then we don't go back to that same level. Like we didn't just go back to 6,500 at SP 500 futures when we heard the Iran report. So I don't know what to make of that. Is the market saying, well, maybe there's some truth to this, or maybe there's some hope to this, or maybe by Trump giving this rhetoric, he's trying to open the door to discussions. I don't know why, for the points you're making, Dennis, I don't know why we're still up 140 points here in SP 500 futures.
Because shorts are scared, and you have Trump talking about making a deal. This is all the art of the deal. I get really tough, and then I back off. You know, it was a taco tweet this morning. So Iran can deny that there's been any talks. And for all we know, maybe there hasn't been talks. But Trump obviously talking about talking. So that's a positive. Talking about talking from Trump is a positive. So even though there may have not been talks, even though, you know, Trump gets excited and obviously just says, he's obviously thinking about talking here now. Now, if the stock market continues to rip higher, he will get tough again. So here is, you know, the algorithmic formulas. When the stock market's tanking, he starts to taco. When the stock market starts rallying, he starts to get tough. He does not, bottom line, he does not like the stock market going down. We can with 100% confidence, we can say that Trump will defend the stock market as much as he can, as much as possible with his whatever he says. He does not like the stock market going down. That's the only thing we can say with 100% confidence.
Okay, you got murky fundamentals, you got murkier technicals, right? But if you just put your hat on like Brent did, okay, we're still within the range from Friday, right? And the thing that Dennis mentioned, okay, first of all, like on that truth when we were going up, man, bag holders are like, I don't know what's going on, but I never thought I'd see my stock at X price, and I'm selling it there. And then, all right, so you had a lot of selling in the strength. What about all the oil traders in here? I mean, if you're long oil and you're going to 150, do you want to hear this headline? Absolutely not. Whether it's truth or not, you have to react. You can't watch your position go 122, 120, 118, 116, 114, 112, 110. You have to react. So with on the rebound here, and the thing that Dennis was or Brent was alluding to, is that we did come all the way back down to the 64.8350. Maybe we will. I don't know. But now, oh man, I didn't get long on Friday. Quad witch expiration. Did I miss the dip? Do I need to reevaluate? This thing's gonna be over. So there's bids out there. So it's a hard to say that a 300-point range, we're gonna have a digestion day, but the market is trying to digest this information as we keep getting new information. So
and there's going to be more headlines. So we sell off that Iran, but all of a sudden, if you get like, you know, there is some talks happening, the market will rally again. Just talking about talking rallies this market. So right now we know 100% certainty we are in a headline-driven market, and that headlines are all about what is happening in the Middle East. That is what matters right now. All other headlines today are meaningless. Right now it is all about this. Now, we will get back to where individual company fundamentals will matter again. We'll get back to the AI trade here again. Today is not that day. Today is all about what is the next headline coming from the Middle East, and we're going to rally 50 or sell off 50 on whatever it is. That is what all that matters right now. So as a trader, it is impossible to predict the next headline. So how do you trade this environment? You keep your eyes glued to the headlines, and, you know, you obviously analyze it. You know, when you get the overshoots, maybe you short. You know, buying dips, shorting rips has still been working in this market tremendously. Chasing has not been working. You know, obviously we rallied 200 S&P handles on the initial truth. Well, those, you know, people who were chasing that this morning got hit when Iran came out and denied now. But that doesn't, you know, like mean that we can't go back up there. Maybe there's going to be another Trump truth, you know, that's going to say something positive. Maybe there's going to be some type of strike or something. Maybe who knows what the next thing's going to happen. So as a trader, you just have to be prepared for that. There are some environments where technicals driving the bus. You know, technicals, charts matter. Right now, headlines are building the charts. So it's not the charts making the charts. It's not the setup. It's headlines building the charts. So right now, headlines are the only thing that matters to this market. The next headline.
And we have some pretty awesome traders in the STN room who are sharing information throughout the day. I'm in there, Dennis is in there midday. It's a news service. We're trying to be a bit of a news service in there. So if y'all are looking for, a good source and also we have some fun in there. Come check us out. I have a question. And
Yes.
it's pointed at Joel here, and pull up your oil chart, Joel. So in these moments of dramatic headline where a market is swinging around, is there any importance to levels that we touch? Like, for example, in oil, the low that we just touched was 84.37 per barrel this morning. That's a number we haven't seen in quite some time. So, Joel, like moving forward, are traders going to come back and go like, oh, remember the spike, the dip down to just below 85 per barrel? Is there going to be significance for that level, that low here this morning moving forward?
I think what you see in this kind of market, and I'm just looking at the USO right here. I think when the markets get like this, and I know Dennis can speak from experience, and I can speak for experience. When things like this happen, you're not have time to look at charts. You're looking for liquidity.
Okay. Yeah.
And
sure. Great point.
And let's say you were short the USO when this started to happen down. Well, you're like, well, 115. Well, it could bounce at 115. Slams through that. Do you know where it's going to stop? No, traders put out orders at 114. Wow, I just got hit on that. They put them out at 113. Oh, wow, I just got hit on that. They get hit at 112. Cycle out, it came under 110. The only way you're going to catch that is by having, there's no way you can pinpoint on a chart and say, now I can digest this a little bit because I saw the move down. And I could say, now what I would look at is after the digestion period that doesn't do you any, it's after the fact. I'd say, wow, basis the USO, there was a lot of resistance, or a lot of support here at 115. And the bounce, you see where the bounces are with the 8 o'clock prints. But for me, just technically looking at the USO, got to get back above 115. Is it going to be a headline? Is it going to be I have no idea. But depending on what kind of trader you are, I mean, you just have to be aggressive. And when those kind of things happen, you just got to go with the liquidity. The liquidity is not going to ask you to look at a chart, put an order out, give it a little discretion. You just have to execute. So those are people there in the girth. I just want to go to the S&P cash here real quick.
Sure.
Because, technicals don't matter, yada, yada, yada. We lost the 200-day moving average. And we, have been incorporating moving averages into this show for, last couple years. Really struggled with the 50. Not a good sign. And now you gave up the 200. We know that's a big level that institutions want. So are you going to get a decision on the 200-day moving average today? No. Probably pop above it, be below it. But right now, the market's below the 50, below the 200-day. Whatever technical analysis you use, whatever you're saying, that's not bullish. That's not bullish until we gain the 200-day. And you can also, look at that on your chart. So hopefully that wasn't too long of an answer to your question. But
no, it was great. Yeah, great thoughts. Great answer.
Bottom line, we're still in buy the dips, short the reps market here.
Yeah.
But with caution here, now you start getting, to a point where Trump feels very pressured to make a deal. So you can see the pressure within the tweet, or in the truth. Even if there is no talks, the fact that Trump wants to talk is worth something to the upside. The fact that he wants to talk.
The market is
even if he hasn't talked, even if he's lying, which is a possibility, is. It's the fact that he wants to talk that's worth something here. So just because Iran says, yeah, there's been no talks, doesn't mean we're giving it all back. Now, he wants to talk. That's worth something. So is it worth 170 points, which we're off the lows here? That's for traders to determine here. But, right now, if you're short, you're scared. If you're long oil, you're scared. Because this is, and this is good for the world. I mean, this is what you want. As a human, we don't want to stay in war times forever. As a human, we don't want to see more people die. This is good news, and it's good news for the stock market. So, right now we can clearly see this morning the recent dip on the Iranian headline is starting to get bought here once again.
Wowza.
Okay,
You know
so
what?
that's what matters the most. Obviously, you know, we can break down, we can look at oil, we can look at other things, we can look at airlines, which are going to be flying here this morning, totally inversely. Remember, still, if you're trading today, if you know, I don't want to follow headlines, at bare minimum, have the USO on your screen. Have it, you know, because we're inversely correlated with that. All of a sudden, oil starts spiking, S&Ps will start selling off. If oil starts selling off, S&Ps will start rallying. That inverse correlation remains, and it's very strong today. We'll break down, won't be like that forever. You know, 6 months from now, we won't even be talking about oil, you know, with stocks probably. But right now, today, it matters tremendously. And I think S&Ps, the dip is getting bought here because people are starting to think, man, sounds like Trump wants to make a deal. That means that strait's going to get open sooner than later, which is not good if you're long oil. Also not good if you're long stocks like CF Industries. You know, we can talk about the fertilizer stocks. You know, they rallied tremendously there because can't get, you know, the fertilizer through the strait. So we're not able to get the potash and all this stuff through. CF down $5. So, you know, just looking at other trades from this, obviously ExxonMobil, Chevron, all your oil stocks, which have been muted. Their rallies have been muted anyway.
They have.
Oil.
Yep. Selling in the strength.
And why is that? Because this still, I believe the markets are saying this is a temporary price displacement in USO. And when you're not seeing Exxon, Chevron, all those other ones rally, it's got to make you a little bit nervous to be long USO. Because if they really thought USO was going to be going to $150 a barrel, if the market thought that, you know, USO, this is the new norm and oil is just going to stay elevated forever, the oil stocks would be trading a lot higher. So they're saying this price displacement is temporary. So I do believe that it's more of a selling opportunity USO than a buying opportunity. I'd be selling rips on USO, especially after the truth that we got this morning.
To try and bring a little normalcy to this program, Dennis, I just want to go back to Friday. We had a quad wish expiration, and can you remember that back on Friday?
And it was good. We had some movement here. We had some stocks that went into the S&P, COHR. We had a fantastic trade on in the room. Had a huge buy imbalance. Ran up. Look at COHR. Ran up.
I got it.
$13 on the close. I was able to short that. Obviously didn't stay shorted. I would be losing here right now, but it came right back in. So it didn't come all the way back in, but came back in $3-4 pretty much instantly. So just quick money. I mean, these are opportunities. And this
Could you explain real quick that imbalance? I know we got a lot to cover, but just, you know, we got people that are probably new listening. Just real quick, we know it's quad witch. There's orders on the open, orders on the close, add deletions to the S&P. Can you maybe get that in like 2-3 sentences for us?
Yeah, well, what you have is, and we've explained imbalances before, but, you know, it's just, it gives you the indication of where the institutions are on the close. So at 3:50 p.m., the NYSE and the NASDAQ published their closing imbalances, showing that there's big buyers or big sellers on the close. We knew some of these stocks are going into the S&P. Probably going to be some big orders. Sometimes they get crowded and then go the other way, but a lot of times, you know, when they're going to the S&P, they have big buy imbalances. There was 4 stocks going to the S&P. VRT, which did not go up. LITE, which went up a lot. COHR, which went up a lot. And SATS, which went up tremendously on the close as well. You can see those charts, those big spikes. Those are because those stocks go to the S&P and the indexers have to buy stocks. When you have institutions that have to buy because they need to mimic the index, there is that opportunity where short-term traders will take advantage of that. They will take advantage of that by getting ahead of the trade, you know, front running it because they know that those institutional orders are coming in there, and, you know, banking that it's going to go up on the close. Now it can go down. Why can it go down? Because sometimes the traders anticipate it so much that the anticipatory traders, the traders who think the stock's going up, outnumber the actual indexers, and then the stock price can go down. But that's the bottom line. And imbalances, you know, we see stocks gap up on the close because they're going in. They're usually short opportunities. Some stocks gap down, some stocks gap up. There were some stocks going out. COHR was my best trade in the STN room on Friday night. And then the truth happened, and then we forgot all about that.
I'm showing on screen here right now. This is the actual announcement. This was back from March 6th when SP Dow Jones Indices announced that there was going to be these little swapping into the S&P and out of the SP 100, 500, mid cap 400, and also the small cap 600. And I can drop a link to where this information can be found. This is really good information, and you guys will know what I'm going to say here, but love getting information directly from the source. You gotta go, if possible, it's not always possible, but if possible, you gotta go to the source that is actually giving the information. And the link that I'll drop here in a sec is from the S&P Global. This is where this stuff is announced. I'm always looking, a lot of times on a Friday, but most days around 5:15 p.m. Eastern time. That's when this news about, in this example, SP additions, deletions happens.
In wrapping up the expiration talk here, we talked turns in the market, right? A lot of times these quarterly unwinds, short gamma, they had to sell stocks, sell. Well, they sell. But a lot of times you get a pause and a continuation of the trend, which is right now down. We have to look at the circumstances coming off the last expiration, or you get a sharp reversal. The only thing is that we're 200 handles off the low of the move. So if you're leaning on that, Friday's lows, Friday's price action is a little bit more applicable. But
again,
right now,
this overall trading action is going to be continued to drill. I just want to keep reiterating, we're in a headline driven market here. These are small little, price displacements that are happening within the market that are great trading opportunities. But as an investor, let's just put our investing hat on here for 5 minutes before we get, our guests coming on. As an investor, what do you do here? What do you do in this type of market when you have headlines driving your portfolio up 2% one day, driving it down 2% the next day? Do you just stay the course? Do you buy the dips? What do you do? Me as an investor, I think about the overall themes, not about the war, because that is a short-term theme. That's a trading theme. I think about where are we going? Where do we think this market is heading longer term? Now I go back to the AI theme and think, okay, if I think AI is going to be a driver of price for the next 5 years, I want to use the war as a way to get into the stocks in my long-term portfolio that I want to be in, because some of these stocks are on sale because of the war. Like a stock like NVIDIA has been hit down fairly tremendously the last 3 days because of the war. You're back at support, 172. I bought more NVIDIA in my long-term portfolio. Why? Well, it's 17 times forward earnings, and I think it's still going to be the driver of AI. Maybe I'm going to be wrong. Maybe the AI trade is a bubble. Maybe AI is not going to do anything. All these chatbots are going to go away. Open claws are going to go away. None of that's going to happen. We don't know. We don't have the future here, but I'm making a bet that AI is going to be a driver of price by buying NVIDIA and other AI stocks. Looking still back to the hardware and energy. That's what I've been working. Energy, getting hammered. Friday. VST, absolutely hammered. CEG, absolutely hammered. Those are two energy stocks that maybe, when the dust settles here, if we need energy, probably not 100%, nothing's 100%, but I think end up being higher 5 years from now. So what am I doing? Buying, I don't know what you're looking at, bag. It's CEG. Joel's getting
oh, sorry.
But buying good companies that you believe are going to be the driver of price in the future at reasonable valuations. That's what I do if you're a long-term investor in this market environment. So the war gives you an opportunity to maybe enter those stocks.
And also for another perspective, so far what we've learned is panicking and selling on those days, the big down. I mean, the end of the world was coming on Friday. We got the pop near the close, but I didn't even look at the overnight action. I'm like, you know what? They could take it where they want, but stay in the course. You don't necessarily have to add to things like Dennis is doing. You don't have to puke out all over the place, which is easy to do. You just try and look at where you're at and say, yeah, maybe a little diversification. Maybe there is time to move a little money around, but once again, this is an isolated moment in time. We are emphasizing this, and this is a big deal, and it's affecting us in a lot of different ways. But that doesn't, your portfolio, the actions that you make on some of these short-term things, don't let it turn into like a long-term detrimental thing. Dennis is more aggressive and readjusting his portfolio and asset allocation, and I'm more like, okay, if the market's down 1.5% and I'm down 0.6 or 0.7%, I'm okay. But because I also know when the market rips a day and it's up 2.5, I'm not going to be up 2.5.
Yeah, you've got a conservative portfolio.
I'm going to be
all
up
about what you want, like what
Yes.
you need, and at your age. I mean, if you're sitting here at
yeah.
75 years old, you don't want all this beta. So you get into more conservative stuff. I've built up barbell in my long-term portfolio. I've got bonds and I've got AI. And that barbell did terrible on Friday. That barbell's doing no good whatsoever right now, my long-term stuff. Trading account is at all-time highs. That's a completely different animal. Trading is, I'm doing the war trade. We're doing that stuff in the STN room. That's the stuff, the short-term trading where we're getting in and trying to make money and making production. Then, you take some of your money and you put it in your long-term investment account. You invest for the long term. My investing account, not having a good month at all. Hit all-time highs, end of January. I think I'm off 12% from the highs. I'm loaded up with AI. So, when you see NVIDIA down, you see Amazon down, you see Meta down, you see, all these stocks down, I'm going to be down on the long-term stuff. But, the long-term stuff isn't trading. That's investing. I trade my long-term stuff too much. Why? It's hard because we're in a room where I have accountability because everybody knows what I own and they ask me about these stocks all the time. So I'm thinking about them all the time. Probably be easier if I just had the stocks and forgot about them. Difficult to do when I get 10 questions a day about what am I doing on this position. So it's hard to forget about the stuff.
I think
Joel does an amazing job. He just doesn't sell any of it. He never sells.
Dang it! I was just gonna make a joke. I think I know a guy who's really good at that. He's on screen with us right now. I just want to say,
what? But when I put in, when I buy stuff, because you guys make me do these stupid acronyms,
I know.
I get absolutely
blame
annihilated.
the acronym.
Yeah,
blame the acronym.
But remember, for all you people out there that are making fun of my acronym, what was the O in my acronym?
It was outlier.
Yeah. Okay.
This is the biggest outlier trade. That might have been a good call. We're in the full outlier market, like outlier, like to an extreme outlier market.
I wanna just comment here real quick. While Joel and Dennis were sharing their great thoughts on air, we had some really smart people in the background sharing how they're interpreting all of this from an investing perspective. And also putting on your investing hat here,
Sure.
I'm gonna say something kind of obvious and maybe a little off the beaten path here. Community is so important for your investing portfolio. There's a lot of smart people in SCN room who are sharing really good ideas. Maybe one of Joel or Dennis's thoughts for their long-term account doesn't apply for you, but maybe somebody in a community that you're a part of shares a really good idea and it resonates more with you. So, I'm that's not a pitch for SCN. This is a general piece of education. I think having a community where you can get some validation, get some feedback is so important, especially in this era when a lot of people are trading at home kind of by themselves.
I mean, I started trading in 1999 in the Bright Trading office. I could never have become the trader I am without all those traders that were in that office, just learning from them. They were mostly floor traders, but just learning, like how the markets move, the dynamics, the plumbing of the markets, just learning, the technicals from Joel, like just learning all of that. I never could have become this trader that I've become, without that, without having help from other people. So if you sit in your basement, just looking at a chart and thinking you're going to figure it all out, I don't know how you're going to figure it all out. Like unless you're exceptionally
you go crazy.
Maybe there's going to be that person that is. The majority of people will fail because they don't have a community. They don't have people to talk with. I mean, that's what we brought PreMarket Prep for. Fantastic traders in PreMarket Prep. We've expanded it to Stock Trader Network, StockTraderNetwork.com, where you can come in and you can talk with us over there as well. And like all day, we're giving trading ideas. Great community over there too. Some fantastic traders in that room coming up with ideas that help me. So, I mean, that's
Sure.
where it is. It's just bouncing ideas. And then, you like the idea, you go for it. It's a validation of your own ideas too. Like you're coming in, you've got a great idea. You ask somebody and they're like, no, I don't like that as much. Well, maybe you're going to be like, okay, maybe I'm missing something here. Or everybody's like, no, I do like that. And maybe you're like, oh, it's too crowded now or something. But I mean, just validation of your ideas is huge.
And they're pretty good at making fun of us too, Dennis. I mean, I know we have some experts in the YouTube chat, but they they can JV can come. They're like, what are you thinking? But anyways, it's always great to get a broad market perspective on the commodities and futures and stocks from someone that's been in the market a long time and has seen these cycles. Who am I talking about? Mish Schneider. Good morning, Mish, Chief Strategist, MarketGauge. I mean,
a little volatility with your coffee.
I hate to pat myself on the back, but I have this uncanny ability to schedule people a month in advance or something. I have no idea what's going on in the markets, and I'm like, wow, what a good day to talk to Mish, right?
Well,
what a good day to talk to Mish.
Great day to talk to you guys, because I was listening in for the last 10 minutes or so. And Dennis, you always speak such good words of wisdom. So and when we agree, I really appreciate that. So
okay, we got a couple main things that we want to cover, and then we got a little thing that Mish and I want to share with you. Risk off environment, risk on, risk off.
Well, before I even talk about that, today could be a very interesting day. I mean, of course, we could say that about almost every day, but today in particular, obviously, because of the headlines and then the counter headlines. So not knowing the truth or pretending that you are under a rock, which is the way I like to approach the market, and you're just looking at price. What makes today interesting is a couple of things. So before we even get into the risk factors, number one is, of course, my economic modern family is so amazing to tell us and broadcast what's happening and what's going to happen even before it happens. So IYT, transportation, IWM, that's the Russell 2000. Both of them landed and held their 200-week moving average. Excuse me, their 200-day moving average. They also both held their 50-week moving average. The one that didn't in that sort of inside sector, of course, would be Granny Retail. And so that's below everything, including the 200-day moving average, the 50-week moving average. So really, all you have to do, I mean, if you really just want to keep it as simple as possible, is wait to see what happens by the end of the day, have a little bit more patience. And if we see both IYT and IWM hold the 200-day, but more importantly, if we see Granny hold Friday's lows and close above Friday's high, then we may have the start of bottoming talk with a little bit more conviction. But it's a long way till we get there. And I think the high in XRT was like 79.80 or something like that on Friday, and we're gapping above that. So I wouldn't necessarily, I mean, if I was day trading, that's one thing, but I would certainly wait for those signs before I do anything else.
Okay. All right. There's a take a look at the XRT. We'll wait for the price action in that. What right now though, flat out internals. The internals are flashing
risk off mainly. I mean, the only internal that was flashing risk on coming into this day today was that the volatility didn't break out over its recent highs, even with the down move on Friday. And that the gold strength versus the high yield balance is still showing a risk on environment. That's not exactly confidence building, those two things, for you to go in gung ho. And that's why I'm mentioning and starting with the other factors, because I love the reversal trade. It's been the most reliable thing, and it has to confirm properly. And we can show a couple of examples of stocks that actually have already bottomed and confirm that bottoming, just so people can see it's a new 60+ day low. And then you get the next day, or an inside day could happen the next day, but if it closes above the high of that day, it made a new 60+ day low with some volume and holds. Not only do you have a good risk point, but you have a good bounce off point. And I think that's the most important thing. But if you want to talk a little bit, I mean, the volume patterns are weak. Pretty much we have right now, to me, what's most interesting is the long bonds versus the SPY, which was showing a risk-off environment, in that the long bonds, even with all the talk of yields going up and the Fed not doing anything, possibly raising rates, we still have the TLTs, by the way, outperforming the SPY, which could mean something going forward. Right now, it just means a little bit of a risk-off. And, essentially, look at the sell-off we've had in the metals, obviously. And so those are really the foreign markets. But I kind of mentioned the Modern Family because I think they've showed risk off, except that they show the potential. So, that's kind of what I'm looking at right now in terms of the internals, is what happens with the bonds versus the SPY, what happens in the three sectors I just mentioned. And then also what happens in gold and silver. Yeah, go ahead.
This is the boogeyman in the room. I mean, is the TLT, because great. I got stuck with that. Like, I'm like, I still think that interest rates are going to go lower next year and at the end of this year. But right now, that is not the case. This war changed everything, and it just basically, the TLT has just been collapsing ever since the war started. What are your thoughts?
That's true. Well, collapsing, but Dennis, it is still above September highs. Last June, September lows. I'm sorry, my brain is September lows and June lows, which was even lower. So one could argue that this has been under a lot of pressure, of course, but it could also say that we could be trying to base out here, and that 85 level, even down to 84 level in TLT, is super important. And this is just a bunch of noise because of the war. Because if you think about it, I couldn't agree with you more. It's of course going to be a matter of when.
Yeah.
Just the $39 trillion in debt. The fact that nobody really wants to buy our treasuries. The fact that push comes to shove, inflation, which they can even rationalize, is somewhat transitory right now because of the war, versus saving our economy, which has slowed down even before the war was happening. And then you have, of course, the private credit market, cockroaches sitting around, could be a big nothing, could be something. It all tells me that the Fed, the government cannot pay off our debt when interest rates are really high. They have to bring the rates down. It's a have to. And even if the Fed does nothing, to me, that's really bullish, by the way, for interest rates going down. Because the Fed is doing nothing while inflation is going up. So that's telling you that they don't really care that much about it. So I think if we can get over 87 again in TLTs, I'd take a shot. You know where you're wrong. I already have a position that's a little bit underwater. I sold half of it last week. It's not like I'm hugely position sizing, but I'll tell you what, at some point, if this thing really shows its true colors of what I think it's going to happen, then that could turn out to be a very large position for us.
Mish, let's just go. A lot of different things going on, right? Beneath the surface, and you want to, try and focus on different things. And the resiliency in Bitcoin is something, which is the risk asset of risk assets. So I want to talk about that. And then I know, so, you've been following the commodities here. And I remember talking to you a couple of weeks ago, and you were talking about the silver position, and Keith, who never wants to sell silver, you're like, man, I don't know. This is kind of crazy. I just want to sell some, just sell it. And he's like, no, Mish, you can't sell it this straight. And you're like, this is ridiculous.
Hey, guess who won? Guess who won that argument? I did. And we happened to sell some at 100. We sold the highs. And he was, and he was still thought it was a mistake until more recently. And we still have a little bit left. But now I'm starting to get more interested in buying. I thought it could go to $70 an ounce. Now it's just above $60 an ounce. And again, today will be an important day, because if we can get through Friday's high and then have some follow through tomorrow, let's say, then it's possible we have seen the bottom in the silver. I would rather buy silver than gold at this point. And you have to watch that ratio too, because that ratio blew out in gold's favor. That's never all that bullish for either metal, really. So I know. And by the way, sugar. I mean, sugar broke out, and even with oil coming off today, and natural gas coming off, and initially gold and silver coming off. What we saw in the futures market right now is sugar is really barely down. And that's a very interesting thing because, sugar is my social unrest barometer. And what it's showing right now is that there may be some kind of sense of things are getting too expensive food wise. I mean, obviously things are. I mean, I just went to Costco yesterday, and what I think I spent 20% more than what I usually would for almost the same stuff that I always buy. Even Costco is seeing it. So what happens with sugar is that, especially in poorer regions and in other countries, they turn to sugar, because it's in foods that cheaper, number one. And number two, it's a comfort food. And number three, we know countries that will fight over the last pound of sugar on the shelves. So watch that sugar market, because that could really show us that the food commodities are not done, even though we're seeing somewhat of a correction coming now in wheat and corn and soybeans because of the news. So although soybeans are actually up a little bit right now. So there you go. I think you got to watch the food. Now, you asked me about crypto. Let's go back to crypto.
I've been losing my appetite a little bit over things, and that's not. I've been having to use another notch on the belt here. I had all this uneasiness. Copper weakness. Is that just global repositioning, or like, things are slowing down, we don't need copper? We're going to need copper for the companies that Dennis is buying stocks in to build AI centers.
Yeah, I mean, nothing from the fundamentals have changed, except that copper has sort of a double-edged sword, right? Because it also reflects the economy. That's why they call it Dr. Copper. What's the health of the economy? But what's so interesting about copper, if you take a look at the May contract of high-grade copper, which is up a little bit now, it also is sitting right on its 200-day moving average. So people say, moving averages mean nothing, but they do mean something, particularly when they are accompanied by some kind of strong chart pattern. Now, right now, I wouldn't necessarily say, the bottom is in copper, but I might feel a little bit more optimistic over 560. So, we're seeing a little bit of noise here. So watch again, today's low, overnight low, in copper is going to be a very important level to hold. And that level would be 525, let's call it, rounding up. So if we can't hold 525, I mean, again, that's telling you that more of the fear of the economy going into a skids, as opposed to the needs for build out of AI, are overweighing in the copper market.
Okay, crypto real quick. Can you give us your final comments on crypto?
Yes.
Then I got two more things for you.
Okay, well, first of all, I've been in BMNR, and so we got a little nervous with it. We sold some, we bought it back. Yeah. It's another market where where you're wrong. So I'm really watching Ethereum more than Bitcoin. And right now, Ethereum had a breakout last week in the early part of the week. It was 2 weeks ago, actually, at 21.20. It's trading 21.45 as we're speaking right now. I'd like to see it hold again. Let's look at Friday's low, or Friday's low was, really even below that. It went down over the weekend to about 20.20, below where it should hold. But 20.20 would probably be my line in the sand. I'd probably get out if it breaks that. If it holds 21.20 and can get back over 22, I still think the bottom might be in crypto. A lot of people think I'm crazy, but from a technical standpoint, I like it. And from a fundamental standpoint, I like it.
I mean, it's good news here with crypto, like even Bitcoin, that it's not making new lows. Like S&P has been going down. I've been talking about this resilience in both Bitcoin and Ethereum. The charts are identical. They just trade together now. The algos has got them linked together. But I mean, we're not making new lows. Crypto's holding up. And actually, crypto is supposed to be a safe haven in times of uncertainty. That's exactly what has occurred here in the last 3 to 4 weeks. So actually, Bitcoin is finally starting to do its job.
Exactly. Dennis, I don't even have to add to that. You just said exactly what I'm thinking.
Tactical outlook here moving forward, Mish. Lay it on us.
Okay. Well, basically, like I said, I think, this is a good time to be in a lot of cash, which I personally am in my trading accounts, number one. Of course, we have models. Our models are long. A couple of stocks that have been really hot, of course, sold off with the market, like Micron, for example, sure. ASML, more of the memory chip area. If you look at the chart, semiconductor had a big dump on Friday, but really has not violated any major support area. So we're still seeing, you have to see growth do okay here. I mean, that's another tactical thing. Of course, we talked about the 3 sectors of the modern family, but semiconductors are in there too. And if SMH can really hang in there in some of these stocks, I heard, Dennis, you talk about NVIDIA. I mean, NVIDIA could be a great buy down here. I almost would like to see it get back over 180 before I would get too excited. And, you know, I still think that if you look at ASML, for example, which is another stock that we're long through the quants, it's under the 50, but it's holding the low that it made really back in early March. So that's a good point to risk off of if it clears back over the 50. There are opportunities out there in semiconductors still. So you want to keep an eye on that. You want to keep an eye on everything I mentioned before about the modern family and reversals. You want to keep an eye on the gold and silver ratio. You want to see if silver starts getting a little bit more of a bid versus gold. That could be a good thing for silver. And I think you also, there's a couple of stocks, you know, obviously crypto, as we just talked about. And if you want to see a classic reversal, take a look, believe it or not, at Google, which of course is Google, and also Salesforce, CRM. They both bottomed out exactly what I'm talking about. They made a new 60-plus day low. They reversed. They closed pretty good that day near the highs. The next day, they closed above the high of that day. And now they've been consolidating more than actually selling off during this period. So those two areas would also be good. So you want to see what's outperforming. I still like Disney. I still like Eli Lilly. I think that sell-off has been a gift that we had recently. And I'm still looking at my good old favorite Rivian. Every time it goes below 15, it's a buy. Every time it goes near 17, it's probably get out. And it's going to range like that until things improve overall.
Okay, Mish. So we'll wrap it up. We're on phase 2 of the modern family, right? We're working on a new one. And I'm going to throw you under the bus here. And we did Granny Retail, right? And I'm going to tell everyone the next one we're working on is Sister Semi, right? A very important point in the market. So just for a sneak preview, can you do your Sister Semi voice, or do you want to save it?
Well, Sister Semiconductors is like totally awesome because, you know, she's a Valley girl, right? Because she grew up in Silicon Valley. That makes her kind of like, you know, this really cool, like, you know, brilliant, but very cool Valley girl woman. Of course, in the voice of that, you'll hear in Sister when Joel's interviewing her. We're working on that right now. You'll get to hear her for real. She has a backstory. But the other thing that's really interesting about the modern families, I took a pause on the animations for the family and for my avatars because we've been working on our youth financial literacy series. And we're now getting that out to pitching it to a couple of places. I'm not even going to say where. And this week we'll go back to making the animations plus get our interview ready with Joel. But yeah, I mean, it's been amazing. And through these animated representations, pushing the envelope on AI, it's been really fun and really digestible because we say what we need to say in 40 seconds.
Mish Schneider's Chief Market Strategist, MarketGauge, covering it all, Mish. I can't wait. I got the answers to your questions. I will do a better job next time, I promise. Okay. All right. Thanks, Mish.
Thank you, guys. Bye.
Did we get some more good news? I don't know. I don't want to rely.
So let's just talk. And Trump wants to make a deal. He spoke with Joe Kernan, wants to make a deal. He's out there wanting the stock market to go higher. And every time it dips a little bit, he comes and says something else to try to make it go higher here again. That's like he's controlling the stock market right now. So you can't fight the Fed, you can't fight the Trump. I mean, it's where we're at right now. So if you're short this market, you're fighting Trump right now because Trump is hell bent on making the stock market go higher. So we dip. Like if we start giving it back, he's going to come out with something else to try to make it go higher. Does he eventually lose his power if he continues to do it? Well, we were saying it was starting to diminish, but now the tweets have just gotten stronger. The truths have gotten stronger. You know, saying, you know, like this is like a deal. We're going to make a deal. We're talking. Like he's taking it to another level to try to get the stock market to go higher. So, I mean, Trump wants the market higher. Everybody is listening, at least from a trading perspective here.
True.
So he wields the sword. He wields the power. Hard to fight the Trump.
He was just on Fox Business. He said Iran wants to make a deal badly and could be within 5 days or sooner. I think when he gives comments like on timeline, the market is especially sensitive to it. I'm going to share.
I think, yeah. And he knows that. Don't kid yourself, Brent.
No,
He
for
knows,
sure. Yeah.
like when he
Absolutely.
says something like that, like the market loves hearing, oh, we're going to get a deal within the next 5 days. Is it
Right.
going to happen? Very doubtful.
We'll
Very
see.
doubtful there's
We'll
going to be
see.
a deal within 5 days. But the market wants to hear this stuff. So that's where we are. So he knows. Don't kid yourself. Like when he's doing that interview, he knows what the market wants to hear. And that's intentional. It's intentional to give those timelines because, you know, if you just say, oh, yeah, we'll get a deal eventually, that's not going to move the markets. We're going to get a deal in the next 5 days. That's going to make the algos buy. So he's not stupid in this way. He wants the market to go higher. And this is a full on this morning intentions to bring the stock market higher. The stock market continues to climb. Then he can get tough again because now I've got, you know, like cook, you know, now I'm cooking. Markets are higher. I can start to get tough here again. Back to the art of the deal. So do I think that there's going to be a deal? For sure, absolutely, eventually. Do I think it's going to be in the next 5 days? I don't know. Nobody knows. But what we do know is, again, going back to the beginning, is that Trump wants the stock market to go higher. And if you're short, that is scary.
I will direct y'all's attention to on screen right now a WSJ article from this morning. It was 8:30 a.m. That's probably an update. Lawmakers introduced bipartisan bill to ban sports betting on prediction markets. DraftKings shares trading up about 7% right now on that report. Also Flutter, FLUT, that one's trading up 10% on this report. Thoughts here on this news or price action, fellas?
These stocks have been just in the gutter. And again, when you have stocks that are in huge downtrends, Flutter, 220 at the beginning of the year, $100 it got down to, kissed $100. That's a downtrend. So when you get these rallies, these snapback rallies and these headlines, it's usually more of a selling opportunity than it is a buying opportunity. So sell rips on stocks and downtrends, buy dips on stocks and overall uptrends. Unfortunately for DKNG and FLUT, these stocks are in the gutter. Do I think prediction markets are going to go away? No. Do I think they're going to be able to regulate a little bit more? The regulation comes for everything. But that's still an issue for DKNG and FLUT. And I think these stocks, their better days are behind them.
I predict prediction markets 25 years ago, and I was way ahead of it. Got nothing to show for it. So.
You were trying to get involved in that, Joel. Yeah, you were way ahead of that.
Got nothing to show for it. Sorry,
I don't know. Does anybody? Let's see in the chat. Does anybody remember Trade Sports?
Is that early? Is it like what year is this from, Joel? This is from like the early 2000s.
I'll tell one more story, and this is really gonna piss people off, but that's okay.
Okay.
When did
can't wait to hear it.
What year did that guy Tyler win American Idol? Do you remember that?
Yeah, I remember you told the story before.
Okay,
well, that's fine. You got to tell the story now.
Season 6, maybe.
Okay,
yeah.
Why? Oh, you bet on him.
Well, here is the thing. Rob and I, who's been on the show before, had a platform. We had a trading platform for Trade Sports, and it was just like a montage, right? That buy and sell buttons and stuff, and this was before the super fast feeds and everything. And he was trading at a 80% probability, right? That he was going to win.
Okay.
And I had my computer and I was simply watching the guy's voice, and it looked like he was going to say a T. And so I lifted all the offers up to 99. Ended up sweeping the book.
And made the money. You were arbitraging. Yeah, that's information arbitrage right there. The tech come out and you're all over it. Joel's like the algo right there.
That's awesome.
Yeah. Yep. And then when Bush came in and shut down overseas wagering, we had to shut down our software. A very sad day. But Brett, Dennis, and I, and the guys back around, we're working on new software. Even better, but
we're working on all kinds of things in the background.
What is it? Do we want to wrap this up, or do we just want to talk and just watch this market go up and up and up?
I think so. Just to recap again one more time, we had the rally Friday night, the sell-off Saturday with the escalation, and it looked like Trump was getting hostile here, and then this morning complete turn reversal, call it taco, whatever you want to call it. and the markets rally substantially. Then we get the Iran saying there's been no talks, but markets are now digesting and saying, yeah, but he wants to make a deal. And that's good news. And that's why we're moving back up to the highs here. And that's why we're up substantially. And I'm not surprised we're up substantially here. Something could change. I tell you, if we get too high, then the Trump starts to get more aggressive on, and the art of the deal starts to happen here again. But if you're shorting this market, you are definitely fighting Trump. That's it.
And that's it, and that's all. Joel, any exciting guests that you want to highlight that'll be on pre-market prep here this week, real quick, while we're 1 minute over?
Yeah, we will break out that calendar, and what a time to break out Craig Johnson. Okay,
nice.
Right?
Heck
from
yeah.
Piper Sandler, who was cautious at the beginning of the year. Yeah, Jay, I know you take notes on everybody. Yeah, he was cautious on this market long before all this stuff happened. We'll get him. We'll get another analyst on Wednesday with Ivan Feinseth. Good old Ivan. You know what Ivan's going to say. We can already do the segment.
Ivan is always eternally bullish.
Yeah.
You know what? He's right. Eternally bullish in the long term is a good way to be.
And then back-to-back Tommies to end the week. Tommy Lackey, who's been doing a fantastic job on the Stock Trader Network. Well, Tommy, then Tony. And then we'll get Tony Pollock back again.
Awesome.
So that's what we got going. Besides all the extra programming we are doing on the Stock Trader Network. Folks, thanks for joining us. I mean, these are days where it's tough, but being in a community, discussing the markets, making a game plan, that's what it's all about. Go get them. Back with you tomorrow morning.